You're listening to Win-Win, an entrepreneurial community with your host, Ben Wolf.
And welcome to Win-Win, an entrepreneurial community. I am your host, Ben Wolf, as always. And I'm very pleased to talk about what I think is a very interesting and very underdeveloped topic, very not talked about enough. I think this is a really interesting subject. And that's why more senior executives are going fractional, going on their own and going fractional. I think that's I think it's key for the business owners, which are you guys in this target market. Obviously, there's a lot of other trusted advisors and people who listen to and watch this podcast, but I think that for business owners, like to understand the dynamics in this industry of the fractional leaders that are becoming available to you, where again, you can get super experienced people that would cost you an arm and a leg if you had to hire them full time for a fraction of the cost for a lower price point, but with a lot of experience because they're going fractional. And why is that happening? Why is that an increasing trend? And my video just stopped. Apologize for that for those of you on video. I probably shouldn't have even said that out loud for those on audio. Either way, why senior executives are going fractional. I encourage everybody to subscribe, leave a review, wherever it is that you're listening to or watching this podcast. And if it's YouTube, make sure to click the little bell and click all updates and subscribe to this wherever you're listening to it. Please do leave a review. It makes it more accessible, knowledge, the information that we're sharing here with more people. So go ahead and do it. Maybe pause this, subscribe on Apple Podcasts, Spotify, whatever it happens to be that you're listening to this on YouTube, and leave a review. And with that, I want to get into introducing our guest today. He is a CFO advisor at Vertex CFO, providing fractional CFO services to middle market and well-funded startup companies. He has served as the head of finance at numerous organizations over a 25-year financial leadership career. You can find out more about the company, about our guest today and the company he's with at vertexcfo.com. That's VERTEX CFO.com, vertexceo.com. And with that, I give you Kevin McMahon. Welcome, Kevin.
Welcome, Ben. Great. Thanks for the intro. I think you said Vertex CEO. I guess we all aspire to be
Did I say that?
CEO.
I said that again? Vertex CFO. Oh my
You said it once. It's okay. Maybe it's an expansion area for us. Who knows, right? But that's great.
It could be. You could make sure to reserve that domain. Make sure to do that.
Yeah, exactly. I'll grab it right now.
So again, sorry, vertexcfo.com. Kevin McMahon, so welcome. And if I could ask you, Kevin, to get into what I ask really all the guests, to tell us a little bit of your story, just a quick 2-minute history that gives us a picture of how you got to be in the position, just speaking about what we're talking about today.
Okay, yeah, sure. And I'll try and be brief as I can. So my background, I grew up in the UK, you probably can guess by my accent. Very working class background, didn't really have any role models in the CFO or just in professional work in general. The one I did have said to me, well, all the companies I know are hiring finance people like crazy. So it's a great entree to get into the business world in general. So I was always fairly numerate and I'd followed that through college degree. And then sure enough, I landed my first job in London was, wow, okay, so you got an accounting finance background. That's great. Yeah, I'm sure we can find an opportunity for you. So I took to it like a duck to water. And I've always been inquisitive. I've always had an actual desire to learn. And so I knew that this would be a great opportunity for me because every company has finance.
Mm-hmm.
And so I never knew which industry I wanted to work in. And so given that, there was such a wide spread of opportunities, I've been able to work in manufacturing, retail, wholesale, my own business, et cetera, software, internet, SaaS.
Mm-hmm.
So it sated my curiosity, I guess. So it was that initial, okay, well, I don't know what I want to do, but in broad lanes, I just want to keep on learning. And my, like I said, I had a bias towards numeracy. And so this tended to feed it.
Mm-hmm. Very cool. And, and so I guess that's a good way of segueing into the next question I want to talk about, which is again, why are more fractional executives going fractional? Why are more executives, high level leadership people going fractional, going out on their own, taking that risk of having to find clients and going on their own and doing that. And I think that you have a really, really interesting story. So if you could tell us a little bit about like what your experience has been in the dynamics that happen with successful executives in these middle market, well-funded companies. What's the reality like for them? What's the situation for them? I think this will be very informative for business owners, and a lot of executives, obviously, or people who are already fractional are going to see themselves in this. But like, tell us about your story. What's been your experience in these kind of companies?
So in terms of working in the corporate world, in general?
Yeah, in the full time, right. Before you went
right.
fractional, like what was it like? What were your experiences that kind of got you to this point?
Okay, got it. So I found after probably the second time that my position had been eliminated, that a theme was starting to build. And this theme was change is inevitable, okay? Businesses change or die. And as part of that change, you're acquired or you're sold off or you branch out as your own separate entity. And typically, it's certainly the first couple of occasions, we, the company I was working for at the time, was acquired by a third party, just normal course of business. And most of the time, certainly almost every time for me, what happened was the acquiring company would come in and have a different view of how they wanted finance to be run. They would typically have their own people, and because, like I said, finance is such a ubiquitous, genre, I guess, everybody's got their own flavor. And so being part of a leadership team in the company that was acquired, certainly I feel like you're the guy who's always got the most to prove. An acquiring company is not going to come in and change the sales leadership, because that's nascent to the business. The operations leadership are also nascent to the business, but the finance guy is almost like seen as the plug and play. And so then that's not to denigrate finance people, but like I said, most of the time companies who are acquiring, they want their guy. They want to know, to make sure that they understand that the P&L very, very closely, know where the bodies are buried, if you like. Sometimes the finance person is seen as very strongly representative of the former culture. I was very involved in the growth strategies that we had at a couple of companies. I'll give you an example. We were very successful. The business I was in, very successful. We grew from 70 to 120 million bucks in 4 or 5 years.
Wow.
A lot of that growth was organic and through identifying adjacent markets in the domestic area. But we also, and a lot of this was down to myself and one other guy, we identified international opportunities to grow. And so we rolled out a plan where we've put that business in 6 more markets in Canada, US, Canada, France, Germany, UK, Australia, and Japan. So the new entity or the new acquirer comes in, private equity group, and the first thing they say to me is, why are you running a business with all these entities losing money? And my point was, well, because this is the plan, okay? We started these businesses, there's a 3-year path to being break even, after which these businesses will also be as profitable as the US one at 30-40% margin. And I'm sure they understood that, but because I was the bearer of we have to invest in these. If we don't invest in these new markets, then we're not going to grow. They saw me as, holding on to the history and not being ready to make a tough decision to cut these businesses. And my point was, guys, we can cut them tomorrow if we want and put 50 people out of work and add 10 million to the bottom line. But what about 5 years' time? If the US market goes soft, we're going to be reliant on the French market and the Japanese and the UK, etc. So my time horizon was,
which is,
I guess,
why it was done to begin with.
Right, and our parent company at the time thought it was a great idea and backed us. So I think I was seen then as, if you like, the holdout, or the guy who was still waving the flag for the old strategy, which I thought had been pretty successful. But I guess that created a problem. These guys were, they had a specific goal, which was come in, like a lot of private equity companies do, come in and make some changes and, if you like, flip this thing, which they did. They flipped it within 2 years. By which time, they'd I stepped aside at that point.
Right, and they didn't have an interest in the long-term strategy because that was not their strategy.
Well, exactly. There's completely different. You're right. Theirs was all about come in, make some quick changes, and walk away with as quickly as possible with as much as possible. And who can deny them? I mean, these guys are making a lot more money than certainly I would ever make.
Right.
So that was definitely one example.
Uh-huh.
Other examples, I would say.
Were there ones that were not an acquisition scenario?
No, I mean,
It's usually that's what you see, and you're just saying it's like a day-to-day occurrence, but it's usually an acquisition scenario when you kind of, it's also like a high price tag position, right? Anybody on the leadership team is one of the higher price tag positions, more overhead, and
right, definitely the acquisition. I'd say it's a clear theme. And
right.
three of the changes I've done have been due to that.
Wow.
In quite a few cases, I would say, outside of my experience, where you've got a CFO in place in a division, the division might have a lot of wide-ranging responsibilities. If you're absorbed into a bigger entity, some of the responsibilities of that CFO might go away and be functionalized. Let's say if the smaller business has some legal work to do, that might fall under the finance guy. Some operations work might fall under the finance guy. Once you're in a bigger environment, a larger company might have specialists. Exactly. And so quite a few cases, and I've done this myself, so it's almost like the first place you go to, and I say this tongue in cheek, first place you go to find some savings on a new acquisition is, how can I replace the senior finance guy and have everybody else step up a little bit and maybe have the new headquarters take on a slightly different role, and bingo, I've saved the full-time CFO cost. That's it's a feather in the cap kind of thing. So it's definitely it's definitely something that happens a lot. Like I said, in three of mine, it's been a case of change of ownership. In the fourth one, it was more a change of direction, a change of leadership, and a reorganization of divisions within a very large company. And at that point, I was looking beyond already. I was saying, guys, I don't see that there's a role for me going forward. I was fairly articulate, fairly verbose, saying, could you guys see a way to making me a decent offer and decent package, and I'll go off and do. But the next thing I already knew was I wanted to be a fractional. So we talked about this for a little while, and as if by magic, one day it happened, and they gave me a severance, and I was absolutely delighted.
Right, you had the runway to do this. I guess it's almost like wow, why would someone want to work? I mean, you work all the way, right? You work all the way up the ladder, to learn the business, to accomplish things for businesses, for their owners, and then, and then in the end game in so many of these scenarios is to be acquired, to be valuable enough and to be acquired, and then, and then you end up losing your place and have to go on to the next one or whatever, and it's just, it's, I don't know, it's a little like, I don't know, not an ideal scenario to set up if you want to incentivize people to want to get to the top of leadership when it comes to finance. Unless the fractional leadership that's the pinnacle. Like, we're there.
Well, I wouldn't say that.
So you're working up to that.
I don't know. I mean, I think a lot of people, a lot of industries, you get to a certain stage, a certain age, and you find that you're only using 30 or 40% of what you know. Maybe using that all day long. So it's a full-time gig per se. But man, it'd be great if I could get involved in raising money again. And yeah, I'm in a corporate role, and there's no such thing, right? It's very much a running, repeating type of business. We do budgets in this month, and we have a very strict, month end is day 2, and month end is day 2, and presentation is day 5, and whatever it might be.
Right.
It's a very, very strict timetable, and so
boring.
Well, it's, I guess if you got a background or an enthusiasm just to learn new businesses, then yeah, after a while it's okay. So how much more did I actually learn this year versus last year? Versus when, 8 years ago I did a startup business, and my God, I learned so much, way too fast. And you look back on those days, fond memories, comparing to just ticking over another year in a corporate enterprise. And again,
Right.
these guys, they're looking at the bigger picture, which is, I've got these younger, talented people. It's almost like I've got to make sure that I create room and headroom for people to continue to grow in the organization. And people 25 and 30 and 35 years old are growing at probably a much faster rate than a corporation can grow, to give them more and more opportunities. So it's like a natural, you get to 40 plus, and if you haven't reached a certain stage, you kind of move to the side a little bit, because you got to make room for someone who you used to teach, who's now going to be your boss.
Right.
So, I mean, I never stayed at one company for more than, I think, probably 3 or 4 years in the same role. And when I did stay longer, I had multiple promotions, which was great. But again, it becomes a pattern, and that's the thing that I noticed. It happened once, fine. Happened twice, wow, that's similar. Third time, well, I didn't think that was going to happen again. And then the fourth time, okay, you know what, guys, I'm done. How many times I go around? Do I need to go around this to get the message? Okay, and so that's another big reason for the appeal of working in a fractional environment.
Right. Well, it definitely is apparent, kind of what led to the evolution of going in that direction. And how did you end up choosing to join the Vertex CFO team? Also, I don't know, do they work? Does everyone work through Vertex CFO, or is it kind of like a shared marketing and everybody kind of works independently through their own companies, or how did you end up there, and how does it work?
Okay, so a colleague at my last company, he was actually CFO, sorry, he was CEO. Now I'm confusing CFO and CEO. Thank you. So
sorry for doing that to you.
I'll keep reminding you. So yeah, he was their CFO, CEO. My God, I need to start again. And he had a connection to another company that he was involved with, to Vertex. And so when I explained I was leaving, we talked about next options, next steps. I'd heard of the fractional space. I knew there were a lot of companies in that space, a lot of competitors, and because my colleague knew the principal of Vertex CFO on a personal level, he sought out an introduction. The principal and I met, and we hit it off pretty well. And his point was he wanted to build the business. He'd done this for probably 6 or 7 years, having come out of a corporate environment like me, and found so much more reward, just personal reward, in helping companies to address issues, fix problems, identify growth, maybe even go to the stage of selling the business, and then working with the new entity, as well as potentially working with the guy that you helped to sell the business. So he'd grown the business from just himself. In 2014, he had a team of, I think, 6 people, so controllers and staff accountants as well. Okay. And I felt like it was a good fit from a personality perspective, and so I moved forward, and that was last year. So I'm definitely not a veteran. I've been doing this for 12 months. How it works, each of us are independent. So I'm a 1099 employee, basically. And we track our time, we bill our hours back to Vertex on a monthly basis. Vertex then bills those specific clients, and we're rewarded, we're paid that way. So it's, I think, fairly standard, but there's no salary element. It literally is whatever you bill and the client pays. So that's really how it works. There's an element also of biz dev. So if I were to find specific prospects, which we turn into potential clients of actual clients of Vertex, then whether I'm the CFO going forward of those companies or not, I would get like a residual commission, so kind of a finder's fee. So that encourages me to go out and do my own, specific marketing, knowing that either I'll have an ongoing gig with them, or if it's one of my colleagues that ends up being their CFO, I have some financial interest.
Right.
Vertex CFO has acquired a lot of its clients through, I guess, like most companies do, I think, combination of biz dev, internet marketing, and just networking events. I mean, we put out, posts through LinkedIn probably about every day or every 2 days, and we've got a good following there.
Mm-hmm.
Vertex CFO is also a sponsor for Colorado Companies to Watch,
Okay.
which is an organization that helps to foster new companies. They have awards, and they share resources across those companies. And the principal, Brian, and myself have been to a number of these companies who are very small, maybe 4, 5, 6 people, but
Mm-hmm.
growing really quickly. And the role that Vertex CFO has there is to almost just be a mentor to these companies, not to say, hey, we want to provide you financial services. These guys are too small to need a CFO, but they may need to know to get a hold of a good patent lawyer, or to get a hold of a strong IT person. So we're able to help, through the network that we have within Colorado Companies to Watch, to point them in the right direction,
Right.
to get those resources. And obviously the long-term hope is that those companies will grow and develop and get to a point where, they're calling you to say, hey, you guys worked for us. It was a great relationship. You're our mentor. And then now we're at a point where we need some financial help.
Right. Right. No, that's really interesting. And so I get a better picture of how that works. I guess I also want to ask you about something that we've talked about before, which is that you said actually that like around 80% of your clients that you're working with as fractional CFO are in like massive hiring mode and in growth mode. And I guess number one, why is that? I guess, coronavirus and obviously lockdown, not everybody's doing well. So just curious if you see common denominators or just a coincidence, but like what's going on with them? And well, that's the first question. Yeah.
Yeah. I mean, if I had 100 clients, I'd say, yeah, it's a real stark statistic, but I don't have 100. I have less than 10. And so I happen to think it's just almost a coincidence of circumstance.
Just broke down that way.
Yeah, I mean, specifically, a couple of them are in very high growth scientific testing businesses. They're associated companies. And I mean, they've grown, they tripled in size 2018 to 2019 when I joined them. And last year when I joined, last year, 19 was, I think, triple 2018. This year, the plan is to basically grow another 50%. Wow. And so the business says we're both growing at phenomenal rates anyway. And so what's happened this year is that growth has scaled back somewhat from, stupid numbers to more reasonable 10, 15% numbers. And so in their particular case, so both those companies, we were hiring 10 to 15 people was the plan. And very quickly when the virus hit, it was a case of, well, we have no idea how long, how deep, how far this is going to go. What the heck do we do about hiring? And I said, well, the first thing we do is we stop all new hiring. And we've taken a step back, so don't continue to add because they build up anyway in anticipation of growing significantly this year. So we had a lot of, we had a lot of capacity that there was, questionable whether we would be able to use it or not. So since then, they've reorganized a little bit, and in their particular case, they found that there are some definite growth areas, some geographic growth areas that they hadn't tapped before. And so they've been able to, I wouldn't say get back on the growth bandwagon, but definitely this year their revenue will exceed last year, which at the beginning of the year was, well, yeah, I could fall out of bed and do better than last year because I'm on this huge trajectory. And so by April, our first forecast, reforecast in April, said, guys, best case will be flat. And so that's when we had, guys, put the brakes on. Let's if we can at all costs avoid any severances, because that creates a whole new set of challenges. So, you know, and let's not do pay cuts if we don't need to. So we're able to avoid both of those. But the cost, if you like, the cost of that was that we're not going to continue to hire and build, you know, dig ourselves a hole. So they've come out of that a little bit, and they're growing again. And so they're probably going to add maybe 5 or 8% to their workforce this year, which is, you know, nothing like what we planned, but still.
But for those who are hiring, like them and like others, what else does their role, you know, again, so people might be seeing themselves in this, and what role their CFO, or if the fractional CFO, if they want to bring one on, what role does the CFO play in that to make sure that that's done right and not counterproductively?
Right. So the first thing in a growing business like that, a lot of it is about metrics. It's okay. So what are the triggers to say we want to add 2 more lab techs? Well, it's a certain number of tests per month in terms of the metrics. If we get above that number, then, you know, we're going to be over time, and we can cope maybe for a month, but then we got to be adding people. So definitely a focus on metrics. I would say we also bring to the table just a lot of analytical, you know, trend information and digging down into the guts of the business. Difficult when you're only there, you know, 5-6 hours a week or whatever it might be. But again, because I've got broad experience in different companies, and being with this company now for a year, it doesn't take a long time. You set the reports up, and you're able to extract that information pretty quickly. So it's definitely a lot of metrics analysis, a lot of looking at the market. I mean, where do we see growth, and what does that growth look like? And is it the same kind of business that we've seen up to now, or is it heavier? Is it more resource intensive? So that's definitely a piece. On the back end, I would say one of the things I've been able to do with a couple of my clients is to locate a third-party recruiter. So this is actually someone I used to work with in a previous company, and this person has been working as an independent recruiter for years and years. And the great thing is, a lot of recruiters are taking, you know, success fees and whatever percent of someone's salary. This person I know works basically on a standard rate, so standard hourly rate. Yeah, which, you know, is like as Vertex does as well. So I've been able to introduce this person to 3 of my clients, and they are working with this person right now, and they see it's a great value add. It's kind of a under the table almost, you know, it's not something they expected to get from their, you know, their CFO company, and just the fact that we've got connections and tax people as well, and, you know, various IT resources. So that's definitely, it's like a hidden benefit, I guess. And I think all 3 of us at Vertex, the CFOs, all 3 of us have been in the same geographic market for 15 to 20 years at least. And so that's great from the perspective of, well, okay, so you need a patent attorney. Well, I know someone, or if I don't, I know someone who will know someone. So that's definitely, like I said, it's the sauce on top.
And if you could give it an idea of the scale of the clients that you typically work with, what's a sweet spot in terms of either people or revenue?
I would say probably 25 to 100 employees. The biggest one I have has got 75 employees. Smallest I have is actually 15 or 16. So 25 to 100. And in terms of revenue, I'd say anywhere from 5 to 50 million in revenues. But a lot of that depends. Like one client of mine is $33 million in revenue. And when we met them, my colleague said, oh boy, we're only going to be able to support these guys for a few months because they're on such a growth trajectory that they'll be too big for us, and they'll basically need their full-time CFO. The funny thing was, I was familiar with the industry. Having at my previous company, we started a similar business, and there was another division within that company that was exactly the same model. And it's one where, I'm not saying your revenue is overstated, but it's kind of like a gross revenue to net revenue. So the gross revenue is basically a lot higher than you'd expect for a company of 50 or 60 people. They're doing 30 million bucks in revenue.
Yeah, I've been in this industry like that also.
Right. Okay.
Yeah.
So really, it's about net revenue. So when I said to my colleague, yeah, but I think we're good. I see the net revenues around about, I don't know, 11 or 12 million, which, you know, the margins were exactly the same as what I've seen before. I said, hopefully we'll be with them for a long time. And sure enough, 12 months later, they're another one that's growing and doing pretty well. But again, they're not at 200 million. So in terms of nets, they're going to do probably, I'd say, 10, 12% more than this year. But again, another company they're looking to grow. They see a sweet spot. They say, wow, if we're signing new clients in this environment, wait until we get back to, you know, quote unquote normal.
Closer.
They're I wouldn't say they're rolling the dice, but they're very bullish about future opportunity, which is great.
Right. Yeah, no, that's great. Look, and I appreciate everything you're able to share today. I mean, I think giving people a lot more of a picture of what's going on and the I guess the limitations on the in-house career opportunities sometimes in the you know, in the executive leadership level, and why people are, you know, why a lot of people, and maybe more and more people, especially as financial pressures increase, are going fractional, as they call it, like Breaking Bad, you know, going fractional, and so I think that's really, really interesting. It gives people a better understanding and the role in hiring, you know, which I greatly appreciate. And so thank you so much for coming on.
Okay, no problem. Happy to be here.
Yeah, absolutely. And so I appreciate it. Thank you. And I will see everybody else on the other side as well. Have a good one.
You're listening to Win-Win, an entrepreneurial community with your host, Ben Wolf.